Hi, everybody. Welcome to On the Money. I'm Maria Bartiromo. Here comes the bond king, Bill Gross, on what the Fed will do at this upcoming meeting and how you can position your portfolio to profit from it. Find out what a man who manages nearly $2 trillion thinks now. My conversation with America's mayor, what Rudy Giuliani says we should do about Syria, and are we any safer 12 years after 9/11? Then the big business of Fashion Week. I'll talk to a top designer about how social media is bringing an elite event to millions, why making money is still always in style. On the Money begins right now.
This is America's #1 financial news program, On the Money. Now, Maria Bartiromo.
Here's a look at what's making news as we head into a new week on the money. One of the most widely anticipated IPOs in recent memory is a step closer to reality. Twitter, of course, tweeted out its intention on Thursday and said, quote, "We've confidentially submitted an S-1 to the SEC for a planned IPO." The company did not reveal any additional details, including any information on timing, other than to confirm the tweet is authentic. Twitter has been valued at around $10 billion. Goldman Sachs will be the lead underwriter on that deal. Some big changes in the Dow Jones Industrial Average this week. The 3 lowest priced stocks will be removed from the Dow. Alcoa, Bank of America, and Hewlett-Packard are out. Goldman Sachs, Nike, and Visa are in. The changes to take place after the market closes on September 20th. It was a big week for the Dow. Meanwhile, the index posting 3 straight days of triple-digit gains, mostly on relief about Syria. But the winning streak ended on Thursday. The markets rebounded on Friday, though. Apple introduced 2 new iPhones this week, the $99 5C, which is available in multiple colors, and the 5S with a speedier chip. Apple also showed off a fingerprint reader, so you won't have to remember that pesky passcode for your phone. But the announcement actually disappointed investors. The stock fell about 5% on the news. Another big tech company going private, and Michael Dell is the winner. The founder and chairman of Dell Computers clinched shareholder approval this week in his battle to take Dell private in a $25 billion deal. Dell and partner Silver Lake bested noted investor Carl Icahn in the fight for this company. I spoke to Michael Dell exclusively about his victory, the future of Dell, and the toll this battle took on his company.
There was some distraction for sure. The team at Dell did a great job staying very, very focused. And, in the last quarter, our enterprise solution service business grew 9%. One of our principal competitors also had a 9% change in their business, except in their case, it was negative.
Here we are talking on a day that Twitter is going public, and of course, announcing it's going public, and of course, Twitter benefiting from this huge surge in mobility. That's what everyone's focused on, changing so many industries. Where's your mobile product? Where is your footprint in mobility?
Well, Twitter's a great customer. It's a great example, Maria. Every time a new mobile company gets born, they need servers and infrastructure and storage, and companies need to be able to protect and secure their data on these mobile devices. So what we're doing at Dell is helping our customers access this information in a secure way, in a protected way, and powering those clouds that are being fueled by this enormous explosion in mobile devices.
So will they or won't they? The financial world is waiting to find out if the Federal Reserve will begin to slow down that massive monthly bond buying program this week during the 2-day meeting. Joining me now, a man who has a lot at stake. He's Bill Gross. He's co-chief investment officer, founder, and managing director of PIMCO with nearly $2 trillion in assets under management. Bill, it is great to have you on the program. Thanks for joining me.
Thank you, Maria. Nice to be here.
So what's your take? You've got to make bets going into this 2-day meeting next week, the Federal Reserve's Open Market Committee meeting, the 17th and 18th. The big question is this going to be the meeting that they come out and say, yes, we are beginning the tapering?
I think the Fed likely will taper next week by reducing their monthly purchases of treasuries from perhaps 45 to 35 billion. The market fears that this is the first step of a tightening cycle, but I think I disagree. What investors should focus on, I think, next week, Maria, is what the Fed calls forward guidance, or how long they will keep the Fed funds rate at 25 basis points. And I think they'll reassure us that any increase will be dependent on both the unemployment rate and higher inflation, and that the date for a future tightening in Fed funds is in the far distant future.
You know, already we've seen interest rates move higher. We know that the 10-year yield is around 3%. So to some extent, people are expecting that rates will move higher. What you're saying is, yes, the Fed may begin this tapering, but that doesn't mean it's going to increase interest rates. Do you think the market will push interest rates up on this announcement?
I think it will depend on the confidence that they have in forward guidance. You know, forward guidance basically is just words. It's just a promise, whereas the taper is an actual purchase of securities. So therein lies the difference. I, however, think that the Fed has been pretty forthright in terms of their guidance for the past 3 or 4 years. They haven't lied to us. They've told us basically that the Fed funds rate will stay where it is for an extended period of time. And if they come out, you know, next week and suggest that they will do that as well and tie it to not only unemployment but inflation, you know, I think investors should take heart and that interest rates should come down and not up.
So what's your take on the American economy right now? We're lucky if we're talking about a 2% grower for the economy in the U.S. this year. Back in March, you said you called for 3% economic growth this year. Are you standing by that? You think we're going to have a strong fourth quarter to take us all the way up to 3%?
A little bit stronger in the fourth quarter. You know, that's the period of time when fiscal austerity sort of comes off as opposed to goes on, which it has in the first half of this particular year. But we are basically, as you suggest, in a 2% type of economy. We're in a new normal economy. That was our description 3 years ago, and it suggested 2% real growth as opposed to normal 3 to 4% real growth. And that, is suggestive not only of lower productivity, but also a labor force, Maria, that's only growing at 0.5%.
According to Morningstar, your total return fund, PIMCO Total Return Fund, of course, the world's largest mutual fund, has seen its assets shrink by about 14% over the last 4 months, partly through losses, partly through redemptions, people taking money out. How concerned are you about this?
Well, all bond funds really, Maria, have experienced outflows, including our own, as you point out. When money comes out of the total return fund, it suggests, to my way of thinking, not a lack of faith in our ability to outperform, because we have outperformed relative to the market, but a choice on the part of the investor to move to shorter maturities or to a different asset class, such as our unconstrained bond fund or lower duration types of products. So, net-net, PIMCO isn't suffering. We remain, in my opinion, of course, the champion of consistent performance. And so the total return fund will do just fine over the next few years.
But is that the right move for investors, do you think, at this moment in time? Take money out of bonds and keep it in equities?
Well, it's not necessarily going into equities in terms of PIMCO. What we're seeing, Maria, is a movement into what we call unconstrained bond funds, which are shorter maturity, shorter duration types of products, as well as, other alternative asset products other than equities. So there are a number of alternatives where returns are certainly higher than the 2.5% to 3% offered by the bond market, and PIMCO is benefiting from that.
So what should a retail investor do in the face of what will likely be increasing interest rates, Bill? If you're happy with your allocation, should you stand pat? Are there areas of the market that you believe will benefit as rates move higher in the coming 6 months to a year?
Well, we're not actually thinking that rates will move higher. We're close to 3% on the 10-year. And if the Fed next week, and it's critical next week, if the Fed next week basically, suggests through language that they will keep that Fed funds rate at 25 basis points through 2015 and maybe even 2016, then a 10-year close to 3% and a 5-year, close to 2%, are quite attractive relative to that 25 basis points that's being offered by the Fed for the next several years. So, bonds have had a poor period of time for the past 3 or 4 months. We're looking forward, and we're seeing better days ahead.
All right, we'll leave it there. Bill, it was wonderful to have you on the program. Thanks so much.
Thank you, Maria.
My thanks to Bill Gross at PIMCO. Up next on The Money.
You stand in front of the names of the victims, and that's what's important.
We're taking a look at the 9/11 National Memorial as it builds its financial legacy. And then reflections on that day from the man in charge, Mayor Rudy Giuliani. Later, what got people talking at an ever more social New York Fashion Week. And we look back at the players 5 years after the financial crisis. Where are we today?
The capital program we designed and to get out and put capital into hundreds of banks very, very quickly and recapitalize the U.S. financial system is a huge success.
We are at the 9/11 Memorial on the very grounds where the Twin Towers stood some 12 years ago.
This pool here is the exact size of that South Tower.
These pools, you know, they are meant to evoke the absence of the buildings that are no longer here.
I know that it's been tough to get this project off the ground, so much emotion going into it. In terms of funding right now, where are you in the process of the 9/11 Memorial?
We opened the memorial on the 10th anniversary. We're going to open the museum next spring, and we have been very lucky to have received more than $450 million from individual donations of $5 or $1, all the way up to major corporate gifts, many from corporations that lost people. Our next financial challenge is to operate the museum when we open.
It will cost $60 million annually? Just to run things, right?
Yes, this is a place, of course, that was attacked twice. So security, that's our largest cost that we have. Our goal is to always keep this memorial free to anyone who wants to come. The museum will need to generate revenue.
Can you build this legacy, though, the victims' families, without federal support?
You know, we absolutely need and want support from the federal government for operating expenses. So what we're asking for is $20 million, which is simply a third of our budget. We think we'll get there. We had a great Senate champion, Daniel Inouye, who unfortunately passed away, but he was chairman of the Appropriations Committee, and he saw the connection between Pearl Harbor from his home state in Hawaii and this memorial, and that's why he was pushing for the funding. You know, every time we bring a congressman down here, they have the same reaction as we do, which is this is a beautiful and important place.
When I was at the New York Stock Exchange on 9/11, 12 years ago, you saw the building smoking and you saw the building come down, but you didn't actually have a sense of what was here. And I think that's what you're trying to really show.
Exactly. We're trying to make this area really weave back into the fabric of Lower Manhattan. It's helping the city heal even today.
Much has changed in New York in the dozen years since 2001. This week on CNBC, I spoke with the man in charge of the city that day, former Mayor Rudy Giuliani, who offered his reflections.
My reflection that lives with me forever is seeing a man throwing himself out of the 101st floor. That's the first thing I saw when I came down here. It's lived with me every day since then. But also my reflections are the tremendous heroism of our firefighters, our police officers, our citizens.
They were going in when we were coming.
And somebody, I gave a speech this morning to a group in Midtown Manhattan, and a lady came down here yesterday, and she said, I was surprised. I thought I was going to be very sad. And I was sad, but you know what I really was? I was so surprised at how resilient New Yorkers are.
And that's my reflection too, Mayor Giuliani, because I remember on that Monday, September 17th, you were up there in the podium ringing the opening bell with the firemen, with the police department, with all of those heroes that we remember. And it just gave the whole city, the New York Stock Exchange, the world, a feeling of we will rise again.
And I don't think anybody will ever know, you do, Maria, how difficult it was to get this place open on September 17th. Power was out in all of Lower Manhattan. We couldn't get the police department up, and it just lifted the whole spirit of America.
Earlier in the discussion, the man who's been dubbed America's mayor weighed in on the ongoing foreign policy debate happening right now on Syria.
You know, we don't have a good choice. If we take out Assad, we may have a fundamentalist Islamic government there. If we leave Assad there, we have Iran's best friend standing up, creating a kind of axis of Shiite power.
How much of a risk is Syria to the world? Or to U.S. national security?
Syria is a risk because of Iran. Iran virtually controls Iraq because of all of our mistakes in Iraq. If they control Syria, that's quite a large axis of Shiite power.
Up next on The Money, social media's all-access pass to fashion has driven designers like Trina Turk to work at warp speed. I'll talk to her and Harper's Bazaar's digital director about what's hot online. From style blogs to Amazon's one-click shopping, fashion is now consumed around the clock. And this year's New York Fashion Week was no different. Designers, retailers, and fashion editors scrambling to help keep pace with an ever more savvy luxury consumer. So how does that affect the industry's bottom line? Joining me right now are designer Trina Turk and the digital editor of Harper's Bazaar, Joy-Ann King. Trina, Joy-Ann, good to have you on the program.
Thanks for having us.
Thanks so much for joining us. Joy-Ann, what are the trends that you saw at New York Fashion Week this week? What do you think the top sellers will be?
Well, you know, New York is the first city we go to in a month long of new collections. So it's a bit too soon to call exactly what the shape of the season will be. However, we are starting to see a few trends emerge. Really this sort of new return to femininity in swinging skirts, chic short mini skirts, and this sort of effortless elegance. On the other spectrum, there's also been a lot of athleticism-inspired looks. So there's going to be a range for everybody out there.
And the next show, you go to Paris.
Yes.
Yeah, and that really gives
we go to London, Milan, then Paris.
Wow, that's really
it's a marathon.
That is a marathon.
It is.
Get your marathon shoes on. Okay, Trina, the economy appears to be coming back at least a bit, but you've said in a recent article that your company was still recovering from the recession despite reaching $100 million in sales. How are fashion designers faring right now post-recession?
I think that the industry in general is very optimistic. People are shopping again, but they're shopping in many different ways. Of course, e-commerce has made a huge difference in the way fashion is purchased. And so I think that we are cautiously optimistic and keeping an eye on new channels of ways to sell clothing.
What are the new channels?
Well, just everybody who has a brand has to make sure that their website is up to speed. Also, just with flash sales and a plethora of websites, it's really changed the way people buy clothing.
To Trina's point, the luxury consumer is absolutely still alive, but what's different in her since the recession is that she's a bit smarter and savvier about how she shops. So first of all, she doesn't have as much time as she used to. So to Trina's point, e-commerce is a huge opportunity for her to find the things that she wants. But she also wants a little bit more advice and authority. And she wants to know that what she's spending her money on is really worth the investment.
Yeah, she wants a value.
Exactly.
Yeah, and so the high-end retailers like a Saks, like a Nordstrom, they've actually been reporting mediocre sales recently. So what's going on with the luxury consumer? Is it that it's so fractured, they're shopping in different places online?
At Harper's Bazaar, we see it as an opportunity to really direct them in their shopping habits, which is where our Shop Bazaar venture has come into play. We are able to really dial down the season and break down a list of what our readers should be buying each season, and they're really responding to that.
And Trina, you've been expanding quickly, right? You're going from 8 boutiques to over 30 across the country. You're working on selling your brand in Asia, the Middle East by 2015. What have you done specifically to position your company for growth?
Well, it's really about identifying who we are as a brand and how we differentiate from other brands out there. We definitely try and get the message out that we're from California. That's why we're different. We do a lot of print and color, and we have an optimistic vibe that we believe represents California living. By opening stores, you're able to really express the full feeling and the full vibe of what your brand is. That might not be seen when your brand is presented in a department store or a small boutique that only has a limited presentation.
I love what's happening in terms of social media, actually, Joy-Ann. Let's talk about, the rise of the fashion blogger, for example. I mean, these shows were not accessible to a lot of people for a long time. Fashion Week broadcast online now for everybody. And on top of that, bloggers are now being invited to cover the event. If anybody has access and anybody can write about fashion, can fashion magazines like Harper's Bazaar still maintain that status as, you being that fashion insider? What do you need to do to differentiate yourself online?
Well, the good news is we believe that there's room for everybody in the fashion space. In fact, Harper's Bazaar loves the fashion blogger. We feature them in the pages of our magazine, highlighting their personal style, their picks of the season. Harper's Bazaar has been around for 150 years as America's first fashion magazine, and we definitely have an authority. As for social media, it's great. It's just such an easy way for us to connect with our readers. They read the magazine, they're inspired by what they see, and now in this new digital age, they want to hear from us every hour on the hour, and our social media platforms allow us to do that.
So Trina, the internet has made fashion available 24/7 for customers.
Yes.
They could look at it, they could purchase things. What's the impact of this on your company?
The power of having everything available immediately has really changed things in the industry. It makes what you're showing that's going to be in the store 6 months from now something that you think about a little bit differently, because it's possible that a fast fashion retailer will knock that off and have it out in 6 weeks.
Ladies, thank you very much. Great to talk with you both. Joyanne, Trina, we will see you soon. We appreciate your time today. Up next, a look at the news this upcoming week that will have an impact on your money. Back in a moment.
I remember the first meeting that we had right after Lehman failed, so it was probably Monday, September 15th. And I remember Ben walking into the meeting and saying, Mr. President, we're on the verge of total financial collapse. That's not the kind of thing you want to hear from your Fed chairman.
Welcome back. I hope you'll follow me on Twitter and on Google+. Look for @Maria Bartiromo. Here's a look at the stories coming up in the week ahead that may move the markets and impact your money this upcoming week. On Monday, it will be 5 years since the U.S. government rescued insurance giant AIG. The bailout totaled $182 billion. On Tuesday, the Consumer Price Index for the month of August is due out. It is important because it's an indicator of the rate of inflation. Wednesday will be a big day for the markets. First up is housing starts for the month of August, and then the big one, also on Wednesday, the Federal Reserve will wrap up its 2-day FOMC meeting. We will find out definitively if the Fed is indeed planning to taper the bond buying program. On Thursday, existing home sales for the month of August are due out. We will be watching all of those events and then some. That'll do it for us for today. Thank you so much for joining me. Have a great rest of the weekend. My guest next week, St. Louis Federal Reserve President James Bullard. Each week, keep it right here where we are on the money. Have a great week, everybody. I'll see you again next weekend.